This is a demonstration of exercises S112, 13, and 14, and we are going to be completing an income statement, a statement of retained earnings, and a balance sheet for Centerpiece Arrangements that has just completed their operations for the year ended December 31st, 2024. This is the third year of operations for the company, and they have provided us with data that they have assembled for the business, and we are given a list of accounts and their amounts. Remember that the first statement that has to be completed is the income statement. So there is a specific order that the statements have to be prepared. The income statement is prepared to determine whether or not the company had a net income or a net loss. To determine that, we take the revenue for the company and we subtract from that its expenses. So the first thing we need to do is look through the list of the accounts and determine which of these accounts would be shown on the income statement. And as we do that, I'm going to highlight these in yellow. So we see in the first column that we have insurance expense. That would be on the income statement. Next, we have service revenue. That would also be on the income statement. Then we have utilities expense. It would be included on there. And so would rent expense. However, none of the rest of the accounts that are listed are a revenue or an expense account. But when we go to the second column, we see salaries expense, and that would be included on the income statement. But none of the rest of the accounts that are listed in this column would be on the income statement. Now that we have our accounts, we're ready to complete the income statement. So the first thing that you have to do is the heading. The heading will always be in this order. First, you will have the name of the company, which is Centerpiece Arrangements. Next, you will have the statement that you are preparing, which is the income statement. And then for the income statement, you will list the period that is covered by the statement. And for Centerpiece Arrangements, we are going to be determining the net income or net loss for the year that ended December 31st, 2024. So to determine net income, we first start with our revenue account. So when we look at our list, we see that we had service revenue of $70,000. So we're going to go ahead and put that into our spreadsheet. Next, from service revenue, we're going to subtract all of the expenses. So how do we determine the order to list the expenses? Expenses are normally listed in the order from the largest to the smallest. So salaries expenses would be first, then rent expense, then insurance expense, and then our last one would be utilities expense. So we're going to list those next. Salaries expense, $46,000, rent expense, $16,000, insurance expense was $4,500, and the last one was utilities expense, which was $1,400. The spreadsheet has been adding those amounts together, and so we can see that our total expenses are $67,900. The spreadsheet also has done the math for us to determine that Centerpiece Arrangement had net income for the year of $2,100. Now, how was that determined? We took our total expenses and we subtracted that from our service revenue, and that is how we determined that they had a net income. Now we're going to need that information when we complete the statement of retained earnings. But first, let's go back up to our list and let's look at the accounts that are left and determine which of these would be on the statement of retained earnings. Now, if you remember, the statement of retained earnings is going to include the beginning retained earnings, then the net income, which we have determined through the income statement, and it will include the dividends. So when we look at our list, we can see that we have the retained earnings at the beginning of the year. So we're going to go ahead now and we're going to highlight that. And we're also going to highlight our dividends. So we're going to use that information to complete the statement of retained earnings. Now the heading again would be centerpiece arrangements, statement of retained earnings, and for the year ended December 31st, 2024. So we're going to start with our retained earnings at the beginning of the year, which is 5,100, and then we need to add to that our net income. So that is the reason why we must complete the income statement first before we do the statement of retained earnings. Now we add those two together and we get a subtotal, but from that number we need to subtract the dividends, which we see was 4,800. So we're going to subtract that amount, and that is going to give us the ending balance for retained earnings, and we need that information in order to be able to complete the balance sheet. So that is the reason why we do these in a particular order. I also wanted to mention that if centerpiece arrangements had had a net loss, then that amount would actually have been a subtraction from beginning retained earnings. I just wanted to mention that. Now the last statement that we're going to complete is going to be the balance sheet. If you remember, the balance sheet is the accounting equation. So we're going to list on the left side our assets, and on the right side our liabilities and stockholders' equity. So from the accounts that we still have left, we're going to go through and pick out the accounts that are assets. So we know common stock is not an asset, but cash is an asset. So we want to highlight that. Accounts payable is a liability, but office supplies is an asset. Accounts receivable is an asset, and so is equipment. So how do we order the assets on the balance sheet? We order the assets in order of liquidity, or how close they are to cash, how easy it would be to convert those accounts to cash. So in this case, of course, cash is already cash. Accounts receivable would be the next easiest, then our office supplies, and last our equipment. So again, we need to complete our heading, centerpiece arrangements, balance sheet, and then notice that our balance sheet is as of December 31st, 2024. So our balance sheet will always be at one point in time. It is not for the period. It's the only statement, financial statement, that we complete that is at one particular point in time, and that is because our balance sheet accounts are permanent accounts. They are never closed. So we're going to start out with our cash, which is $7,200, and then we will have our accounts receivable, which were $8,000, our office supplies, which were $1,700, and then we're going to end with our equipment, which is $12,100. So that's going to total all of our assets, and the left side of our balance sheet is $29,000. Now we need to complete the right hand side of our balance sheet. So we can see the accounts would be the ones that are left. So now we're going to use our accounts payable, which is a liability, and our common stock, which is an equity account. So we can see that after we use those, we have used all of our accounts in completing our financial statements. So we list our liability first. So that is $17,600. Next, we're going to list our common stock, which was $9,000. And then we need our retained earnings at the end of the year. So as we stated before, we have computed the retained earnings for the end of the year to be $2,400. So that's why we have to have the statements completed in that order. Now when we add our accounts payable, common stock, and our retained earnings, we get a total of our liabilities and stockholders' equity of $29,000. And yes, we are in balance. Our total assets equals the total liabilities plus stockholders' equity. So that is the conclusion of the demonstration for exercises S112, 13, and 14.